we may be seeing the bottom of the barrel.
Yeah, I mean, the math on the Fed is quickly now eroding the bearish case. They're not going to go crazy. Rates aren't going to go up 1% every month anymore. This is over now. I think the announcement of today's minutes kind of ensured that. We'll creep up another percent or two. It won't matter. It's the front end of the curve. What matters is the back end of the curve. And you can see by the reaction in the long bond today that that is a sign that you're never going to see any more support from lower rates anymore. Now you've got very good, attractive bond yields. People are going to start buying bonds, and that's going to spin over to the valuation of equities, which we think could be really, really cheap based on individual companies.
And you still want to look at some fundamentals like those with free cash flow or those that are seeing their earnings growing now. Talk to me about names that you like that meet those criteria.
Yeah, so since we don't know what the cyclical effect will be on earnings in a broad level, but we get a little hint, right? The companies that are laying people off, some of the financials, obviously the big tech, those are companies that have more downside risk in earnings versus, and we just talked about energy. I mean, it's going to be hard pressed to get Exxon's earnings estimates to be too aggressive for next year. It's already pricing in something in the $60, $70 range for oil. And there's a much better case that the price of oil is 90 to 100. So the upside is really there in an Exxon. But it's also true in a lot of these retailers who have been laying here dependent on a recession to keep their prices down. And yet people keep showing up at their stores and clicking on their products. I mean, the reality of the companies like Ulta Beauty is pretty powerful. And we've gotten Macy's, Dick's, Best Buy, Home Depot have all told you things that a cautious management wouldn't be telling you today if we were in the verge of having a hard recession. These guys all came out and said, consumers better than you think. And I would argue those are names that you're going to actually not see earnings weakness on, but actually earnings surprise over the next 9 months.
If the consumer stays relatively strong, do we avoid a recession?
You know, we could have a statistical one, Tyler. I mean, a down 1% or 2%. I honestly don't think it'll matter for an investor. So the investor wants to own a stock that goes up, right? And for the sentiment to be very, very bearish, which it is today, and companies actually bucking the trend one by one in this space, I think it won't matter if there's a recession, if people are still fixing up their homes or taking trips or going to Ulta Beauty to buy makeup. That's what will happen underneath this big global recession